The biggest threat to your wallet when you buy a car isn't the sticker price. It's not the salesperson. It's not even the car itself. It's a room in the back of every dealership. A room most people spend about 20 minutes in. And in those 20 minutes, the average buyer gets charged an extra $7,000 without ever realizing it happened. Not because it's illegal. Because the system was designed to work this way. And if you've ever bought a car, you've been in this room. Let me show you exactly what happened in there. Here's what most people think happens when they finance through a dealership. They think the dealer shops around, finds them the best rate, and passes it along. Maybe takes a small fee for the trouble. Everybody wins. That is not what happens. What actually happens is this: the lender tells the dealer you qualify for 6%. The dealer turns to you and says, "Great news, we got you approved at 8.5%. And they keep the difference. That alone costs you about $1,400 on an average loan. And that's just the first thing they do. By the time you walk out of that room, you've been charged for things you didn't ask for, at prices nobody would agree to if they knew what they actually cost. And the wildest part? Almost all of it is legal. But to understand how they get away with this, you have to understand something most people don't know about how car dealerships actually make money. You probably assume the biggest profit comes from the car itself. The markup between what they paid and what you paid. And on new cars, that margin is surprisingly thin. Like 1 to 2% thin. According to industry data, the front-end gross profit on a new car, that's the car sale alone, is often just a few $100s. Sometimes they sell at a loss. So how does a dealership with a massive showroom, 50 employees, and a monthly electric bill that could fund a small country, stay in business? The answer is that room in the back. The F&I office. Publicly traded auto groups in the U.S. reported an average F&I gross profit of over $2,500 per vehicle in 2025. Per vehicle. The car sale gets you in the door. The F&I office is where they actually make their money. And they have a system. A very precise, very effective system for extracting maximum profit from every single buyer. Let me walk you through it. So, you've picked out your car. You've negotiated the price. You're feeling pretty good. They walk you to the F&I office. The finance manager takes your information and submits it to several lenders. Now, here's what happens behind the scenes. Each lender comes back with something called a buy rate. This is the actual interest rate they're willing to give you, based on your credit score, your income, and the vehicle. Let's say the buy rate is 6%. The dealer is not required to tell you that number. Not in most states. Not under current federal law. Instead, they quote you a higher rate, called the sell rate. Maybe 8.5%. And here's where the money appears. That extra 2.5%. It generates additional interest over the life of your loan. On a typical $30,000, 60-month loan, going from 6% to 8.5% means you pay roughly $1,400 to $2,100 more in interest. And the dealer? The dealer keeps about 70 to 80% of that extra money as pure profit. It's called dealer reserve, or dealer participation. According to MIT researchers, 78% of dealer-arranged auto loans carry these marked-up rates. 78%. And here's the thing that should really bother you: dealers are not required to tell you what your actual buy rate was. You could have qualified for 4.5%, and they could have sold you 7.5%, and you would never know. In fact, a finance manager on Reddit, someone who does this for a living, put it bluntly. They said, "It still blows my mind we don't have to tell the customer that 2% is for us and the actual rate would be lower." That's a quote from inside the industry. But the rate markup? That's just the warm-up. Now, you might be thinking, fine. I'll just pay cash. Or I'll bring my own financing from my bank. Problem solved. And you're partially right. Bringing pre-approved outside financing is one of the smartest things you can do. But here's what happens next. The F&I manager has already moved on to stage 2. And stage 2 has nothing to do with your interest rate. Because the F&I office doesn't just make money on financing. They have an entire menu of products, and they are very good at selling them. Let's talk about extended warranties. Or as the industry calls them, vehicle service contracts. You've just bought a $35,000 car. You're sitting in the office. The finance manager leans in and says something like, "Look, this is a great vehicle. But if anything goes wrong after the factory warranty expires, and it will, you're looking at repair bills that could run into the thousands. For just a few dollars more per month, you can protect your investment." Sounds reasonable, right? Here's what they don't tell you. That extended warranty they're offering you for $3,200. The dealership probably paid between $400 and $1,200 for it. That's a markup of 100% to 500%. Let me say that again. They are charging you 3, 4, sometimes 5 times what the warranty actually costs them. And a significant portion of that markup goes directly into the finance manager's pocket as personal commission. F&I managers typically earn 15 to 20% commission on every product they sell you. So when they're leaning in, telling you how much they care about protecting your investment, just know that selling you this warranty might be putting $500 to $1,000 in their personal paycheck. From one sale. To one person. In 20 minutes. Oh, and Consumer Reports found that 55% of people who buy extended warranties never actually use them. But wait, they're not done with you yet. Because the F&I office has a whole suite of products, and they're trained to present them in a specific order, each one building on your fear from the last. First comes gap insurance. If your car gets totaled, your regular insurance only pays what it's worth, not what you owe. Gap covers the difference. True. Gap can actually be useful. But the dealer charges $500 to $1,000 for something your auto insurance company will usually add to your policy for about $20 to $50 per year. Then comes paint and fabric protection. This special coating protects your paint and interior from stains and UV damage. Dealer cost. About $50 to $200. Price to you. Often $500 to $1,500. Then tire and wheel protection. Potholes, nails, curb damage, one bad tire and you're out $400. Dealer cost, a few hundred. Sold for $600 to $1,500. And then there's my personal favorite, nitrogen tire fill. The dealer tells you it improves fuel economy, maintains tire pressure better, and is somehow worth $200 to $500. Kelley Blue Book and the FTC have both pointed out that nitrogen tire fill provides essentially no measurable benefit for normal driving. The air you breathe is already 78% nitrogen. One journalist called it what it is, entirely fake. And we haven't even talked about the documentation fee yet. The documentation fee. Or doc fee. It sounds official. Like a government charge. It is not a government charge. The doc fee is a pure dealer profit item. It supposedly covers the cost of processing your paperwork. You know, the paperwork they're legally required to do anyway to sell you the car. In California, this fee is capped at $85. In New York, $175. In Florida, there's no cap. The average doc fee in Florida is $940. The highest recorded, $1,850. At one Cadillac dealer. That's $1,850 for someone to fill out DMV forms for you. Nationally, doc fees average about $490, but in roughly 28 states, there is literally no legal limit on what dealers can charge. Now, let's zoom out for a minute. Because if this were just a few bad dealerships, you could avoid them. Read the reviews. Go somewhere else. But this is not a few bad apples. This is the business model. According to the Center for Responsible Lending, Americans pay $25.8 billion in excess interest over the lives of their auto loans, just from dealer rate markups. That's not a rounding error. That's a wealth transfer. And the government has tried to do something about it. The FTC finalized a rule in 2023 called the CARS Rule, combating auto retail scams. It would have required dealers to show you the full, actual price up front. All fees included. No surprise add-ons. No hidden markups. The FTC estimated it would save Americans $3.4 billion per year. The dealer lobby sued. The National Automobile Dealers Association and the Texas Automobile Dealers Association took it to court. And in January 2025, the Fifth Circuit Court of Appeals threw the whole rule out, on a technicality. The FTC didn't appeal. The rule is dead. In March 2026, the FTC sent warning letters to 97 dealership groups, including locations belonging to AutoNation, Lithia Motors, Sonic Automotive, basically telling them, stop doing this. But warning letters are not enforcement. They're strongly worded suggestions. And while the federal government sorts itself out, the F&I profit machine keeps humming. Q3 2025 saw F&I profits hit $2,534 per vehicle, near all-time highs. The system isn't broken. It's working exactly as designed. For them. So, what do you actually do with all this information? Because now you know the game. And knowing the game means you can refuse to play it. Here are the rules for buying a car without getting taken for $7,000. Rule 1. Get pre-approved financing before you walk into the dealership. Go to your bank. Go to a credit union. Go to an online lender. Get a loan approval with a real interest rate in your hand. Now you have a baseline. If the dealer can beat it, great. If they can't, you already have your loan. Rule 2. Negotiate the out-the-door price. Not the monthly payment. The oldest trick in the F&I playbook is payment packing. They ask what monthly payment you want. They extend the loan term to 72 or 84 months. They bury fees and add-ons in the payment. You think you're getting a deal. You're getting taken to the cleaners over 7 years instead of 5. One number matters, the total out-the-door price. Everything included. Rule 3. Decline every add-on they offer. Every single one. Gap insurance. Get it from your auto insurer for a fraction of the price. Extended warranty. Shop it online from manufacturers and third parties. If you really want it, you can buy it later, often for half the price. Paint protection. A $30 bottle of ceramic coating from an auto parts store and an afternoon in your driveway. And if they tell you any add-on is required or already installed, that's called tied selling. It is illegal under the Clayton Act. Walk away. Rule 4. Ask for the buy rate. When you're in the F&I office, ask directly, what is the buy rate on this loan, and how much are you marking it up? They may not answer. They may get uncomfortable. But now you know to ask. Rule 5. Be willing to walk. This is your single greatest weapon. If the numbers don't add up, if fees appear out of nowhere, if the out-the-door price doesn't match what was advertised, get up and leave. There are thousands of dealerships. You only need one that's honest. And this brings me back to that room in the back of the dealership. The F&I office is not an accident. It is a carefully designed profit extraction machine. Every line on that contract, every product on that menu, every percentage point on that interest rate, it's all been optimized over decades to transfer as much money as possible from your pocket to theirs. And the reason it works so well is that nobody teaches you how it works. You're supposed to figure it out through experience. Which means you figure it out after you've already paid. That $7,000 figure isn't made up. It's what the average buyer in a high-fee state pays when they finance through the dealer, buy the warranty, and accept the add-ons, all at marked-up prices. In low-fee states like California, that number is closer to $4,000 or $5,000. But the mechanics are the same. The point isn't the exact number. The point is, it's a number you never agreed to pay. You never saw it on a price tag. And nobody ever told you it existed. Now you know. If this video saved you money, or just made you angry enough to share it with someone who's about to buy a car, hit subscribe. I cover the systems and industries that profit from keeping you in the dark. Because the stuff that actually costs you money isn't on the evening news. It's hiding in the fine print. And I'm going to keep reading it for you. Thanks for watching.